Greetings to you all. Welcome you all to Chartmaster FX. Your boy Chartmaster here. Today we are going to look at the ignored over under standard operating procedure, which is the IOU. So let's go straight into the business of today. So guys, this is the general information about ignored over under. So the ignored over under is one of the big 5 strategies, and I've already uploaded the other 4 strategies. So this one was the only one that has been left, and now once we complete the ignored over under, then we know that we are done for the big 5 strategies. So you need to understand that this ignored over under is actually a setup that you cannot be able to trade if you don't have the information or the knowledge pertaining the over under. So if you did not watch the KLOU video, you should go and watch the KLOU video. Under the KLOU video, I made a presentation about the over under. So to do justice to yourself, you need to go and understand it. Then you come back to this course module that is the last of the big 5 strategies. So when you are saying, as the name implies, ignored over under, you cannot be able to know the ignored version of it if you don't have the knowledge about the actual setup itself, which is the over under. So once you master the over under, then you can be able to know the ignored version of the over under. The same applies with the Quasimodo. I presented the Quasimodo video first, then after that I presented the diamond. So you cannot be able to understand the diamond version if you did not understand the Quasimodo, which is the base. So you need to understand that, guys. You need to understand that. So in this video, we are only going to look for the buy setup. The buy setup only, but the mentees are actually expected that they also need to look at the sell setups as well, because the only reason why we are actually presenting the buy setup is because we want to simplify things and we don't want to complicate things. So you are advised to understand the buy setup first, then you can be able to look for the sell setup second. So this strategy works for both buying and setup. As I said before, from the previous modules, you saw that sometimes I would give an example of a sell setup, but not necessarily meaning that we can only trade that setup using a sell, but you can also look for buying opportunities. So let's go to the anatomy of the over under. So guys, as you can see here on the anatomy of the over under, you can see here you'll be having your under here, you have your over here, you have your golden zone. So once you see your golden zone, so like I said before, what happens with this price is that it actually creates a low here, and once it creates a low here, then that low is actually engulfed and the price creates a lower low. Once the price creates a lower low, it goes back to the golden zone, and inside the golden zone there would be a decision point that is there, that is more likely to hold the price. So once you see a valid significant decision point, then you can be able to place a trade from there. And also, as I alluded in the video of the KLOU, you saw that we had a key level here. So we had a key level here, but now on the ignored over under, we are not trading the ignored KLOU. Take note that we are trading the ignored over under, so which means here we will only be looking for a over under. Even if it's a KLOU, it's fine, but don't be restricted to say that maybe here there's no key level, then you say that if there's no key level, then even if the ignored version of it, I cannot be able to trade. It doesn't matter for this one. So we are trading the ignored of the over under, not the ignored of the KLOU. So once you just see that we have these characteristics are being met, where we have a lower, an over and an under, and we have the golden zone, and even if we don't have a decision point here, it doesn't matter. It doesn't matter. What matters is that when the price is coming from this lower low, it needs to create a base before it creates a new higher high. So that's the other condition that you need to check for. There should be a base. So this rally, base rally, should be there in order for the setup to be valid. So once the market creates a new higher high, as the price comes back to this base, we expect that the price is going to be held by the base and it goes up to the new higher high, and this would be your safest take profit, and you put your stop loss just below the base. So guys, as you have seen, guys, that in all the big 5 strategies, there should be a price approaching. If there is no PA, there is no go, guys. There is no go. So you need to understand that, so that when you go into the market, you can be able to have higher probability trades. So guys, this is the anatomy of the ignored over under. So now let's go and look at the terms and conditions. So for the terms and conditions of the ignored over under, there should be an engulfment of the golden zone. That means a new higher high must exist in order for the setup to be valid. So guys, as you saw on the anatomy, that higher high was actually ignored, and the price was able to create a new higher high. So that should be met first. So the entry level, we actually place a trade on the first time back to the significant base. That's where we can be able to place our trade, and our stop loss should be below the significant base. Then the target profit should be at the new higher high. So guys, these are the terms and conditions of the ignored over under. You need to look for these conditions, guys, and you should not violate these terms. You need to make sure that these terms are not violated, so that you do not create your own SOP. Remember, these setups have been back tested, and we have back tested them using these terms and conditions that we are seeing. So once you mess up, then you know that you are going to face trouble. You are going to face trouble. So you need just to follow the rules. Once you follow the rules, guys, I can assure you that you are going to make it on the Forex market. Because remember, we have back tested these strategies, and we know the probabilities prior to even executing a trade. So we know these these setups, because we have actually created many flashcards about these setups. So guys, just to follow the terms and conditions. So guys, let's go straight to the chart examples. So on the example number 1, we have the step index M15. So here guys, you can see that we have our key level here. Once we have our key level here, we can see guys that this low, which this low, because we are considering this this high here at the key level. So you can see guys that this low was actually engulfed by this, and the price was able to create a lower low. So you can see now we have the over, we have the under. So we have a high here, we have our higher high. And remember on the KLOU video that we said that that's where the golden zone is located. So once you have the golden zone, then you know that the conditions of the over under setup have been met. So once the conditions are met, then we wait for the price to do whatever it does. Then you can see that this higher high was actually engulfed, and the price was able to form a new higher high. So if you were trading the over under setup, you'd realize that this decision point is actually inside the golden zone, so it's more valid. So you may have placed a trade here, which means you may have entered here when the price was coming from the engulfment zone, and the price just dropped, but did not drop significantly. Why? Because there was no price approaching. Remember guys, there should always be a price approach. So that's why you see that this decision point was not respected to the full extent. So guys, one of the price approaching that is more applicable in the ignored over under is the flippy, guys. Usually where you place your trade, there should be a flippy. The flippy is an awesome one. Mostly the flippy, you know, these price approaching strategies, they sometimes there are some setups where you know that on this setup, usually the 3D works well. Usually the fake out works well. Usually the compression works out on this one. So guys, that's why I'm saying that the flippy, mostly it works very well for the ignored over under. So you need to look at the price approaching in order for you to place a trade. So the price approaching should be in the form of a flippy, a 3 drive, a compression plus liquidity, etc. So guys, we can see that the price, when it actually created a new higher high, now we wait for the price to come back. So guys, you can see that here the price actually made a rally, base rally. So that condition was met, and this rally, base rally, should occur within this region. But usually when the base is around the golden zone, usually you may have very good setups. But however, sometimes the base may be here, like as you can see here, we have a base somewhere here, we have a base somewhere here, we have a base somewhere here. So you need to now filter the bases and look for the best base. So you can see guys that this one was a critical point on this rally, base rally. Why? because you can see even the depth of the flag limit. The depth of the flag limit was actually very visible as compared to this one, you see. And maybe this one was the better one. And you can see, guys, that this one also was at a flippy area, which is one of the conditions of entry that we need to look for. So guys, you can see that if you had considered your RBR as this one, then you would see, guys, that you may have lost this trade because, and there was no PA. Remember, there should be a PA, so there was no PA here, so you don't place a trade. But here there's a PA, you see. So once you see that here there's a PA, then that's when you can enter your trade. So guys, this is the version of the ignored over under. So the price came here to the flip area at the base of the RBR, and the price went up. So your target profit will be here, and your stop loss will be just below this, or you look for another point where price may be in a position to reverse. But if you want to place a tight stop loss, you'd put it here. So guys, this is example number 1. Let's go to example number 2. So on example number 2, guys, you can see here that we have an over under here, which means this low was actually engulfed by this lower low, and we had our golden zone. So usually when we have an over under, we are expecting the price to make a reversal on the golden zone, maybe on this decision point, but the price failed to sell on this decision point. So you can see, guys, that as the price now was approaching the golden zone, it actually went and engulfed this higher high. Once we see that this higher high has been engulfed, then now as the price is coming back, then we look for all the candidate decision points. So you look at this decision point, guys. We have this decision point, we have this decision point, and this decision point at the cap area. So if you look at this decision point, as the price approached this decision point, the price actually reacted. You may have gained some few pips here, but the price ended up engulfing, not respecting this kink, which is our base, which is our RBR. So as I indicated here, a trade should not have been taken here. Why? Because we don't have a PA. No PA, no go. So now you can see that there was a strong momentum as well as the price was coming down. So usually where there is higher momentum, guys, usually the price will not respect that reaction point or that decision point. So you wait for the price to give you some signs that it is about to reverse, guys. You don't reverse in motion. Don't reverse in when we are at a higher speed. You need to slow down first, then you can be able to turn. So guys, we have this decision point again, and this decision point was just respected for a shorter time here, and the price ended up engulfing it. Why? There was no PA. This is how you filter, guys, this thing. There was no PA here, but here on the cap area, you can see that the price had a strong momentum up to here, but when it reached here, you can see that the price was actually slowing down, giving you an indication that we are about to reverse. So this was accumulation. There was accumulation happening here, guys. Accumulation simply means that the demands are being cleared. They were cleared. So I see this demand was cleared by this one, and this one was cleared by almost that one, and you can see this. You see this price action that is happening here, guys. It's showing you that we are on the verge of making a 10. So the price finally turned from the cap area, and it went to the take profit. Our take profit should be at the new higher high. So this will be our take profit, guys. And this is what you need to do, guys. This is what you need to do. So usually, as you can see on the RBR side here, you may have multiple decision points. So you need to filter those decision points. How do we filter those decision points? You filter them by price approaching. You should look at the status quo of the price as it approaches a certain decision point. If it approaches a certain decision point in the form of a 3D, or it's accumulation, or it's a fake out, then you know that that decision point is valid. So I think we are done here. Let's go to example number 3. So in example number 3, guys, you can see here we had a key level somewhere here, and what happened is that we had a high here, we had a lower here, and the price actually engulfed this low and formulated the lower low, and we have a golden zone here. So automatically we have the over and we have the under. So here we have a higher high. So what happens now is that as the price went up, it actually created a new higher high. Once a new higher high is created, we start to look here for the decision point. So you have a decision point here, you have a decision point here, you have a decision point here, you have a decision point here. So guys, as I told you, you know, that's the drawback of this setup. Usually you will be having multiple decision points, so you need to filter those decision points and look for the ideal decision point. So guys, here it was a flippy area. So as I told you that the flip works very well when it comes to the ignored over under. So once you see the flippy, then that's the best price approaching that you can take. But it doesn't matter even if you take another if the price approaches that decision point in form of a 3D or any of the price approaching. But usually the flip is the best, guys. The flip is the best. So guys, you can see here we have a flippy area here. We have a flippy area where actually what do we call this one? We support where resistance turned into support. So resistance turned into support. So we had RS flippy. So we had an RS flippy, guys. So we can be able to filter this decision point. So which means this one was the best decision point. Why? Because it is allocated within the flippy area. So, and you can see also, guys, that we had an ignored accumulation, and the price actually accumulated here, and it went up with momentum, which is a form of liquidity. And once the price comes back to this ignored accumulation, we expect the price to go up. So there was kind of a confluence. So we are going to learn about the ignored accumulation. You see it is one of the soldiers of the jungle. It's one of the soldiers of the jungle, guys. You are going to see the explanation of it when we look at the soldiers of the jungle. So guys, we had a flippy area here. So you will be buying here because we had a price approaching. So you buy here, you take your profit here. You surface take profit here. Your stop loss just below any of the fresh demands that you think is best. If you are someone who is risk sensitive, you place your stop loss very tight, very tight here. So guys, this is example number 3. Let's go to example number 4. So on example number 4, guys, you can see here we have an over under, we have the key level, and we have a low here, we have a lower low. So what happens is that when the price actually went up, it actually ignored this over under and went to create a new higher high. So once this higher high was created, you can see that the price, it actually made a rally here, and a base, then a rally. So it's a rally base rally. So when it created a new higher high, guys, we wait for the price to come back to our base, then we can be able to place a trade. So guys, you can see that we had a decision point here, a decision point here, we had a decision point here, it was a candidate as well, and we had a decision point here. So guys, usually on the over under, ignore the over under, we have multiple decision points, so you need to filter those decision points, guys. So usually if you had actually used this decision point, the price reacted just for a little while and it definitely dropped. So there was no PA here, guys, there was no PA. I think there was, you can see here there is a what do you call it, a support line here, and the price made a fake out going to this. So you may have actually considered it as a valid, and you would have made something up to here, and you may have been stopped out at this decision point. So this is one of the weaknesses of this strategy, but usually you can see that this one was the best one, was the strongest one, and you can see that the price, as it approached this, it actually approached in form of accumulation. And guys, as I told you before, that usually where there is a flipping, that's where you have to place your trade. And you can see here that we had a resistance here and a support. It was a flip area as well. So if you had entered here, unfortunately you might have been stopped out. But if your decision point was this one, you would definitely able to earn something to the safest take profit area. So you would put your stop loss just below here. Then if you are risk sensitive, you find a place to put it, maybe here where there's a kink here, then maybe, yeah, that's where you put your stop loss. So guys, this is the example of the ignored over under. Let's go to example number 5. So on the example number 5, guys, you can see here we have an over under, we have a low here, we have a lower low, we have a key level, we have the golden zone. So what happened is that when the price was coming here, it went and engulfed this higher high and created a new higher high. So once it created a new higher high, guys, then once a new higher high is created, what your homework now would be to look at the decision points and see which one is really the best decision point. So here, guys, you can see we have only 1 and 2. We have 2 decision points here, guys. So we don't know where price is going to react. Maybe it's going to react here or here. So now that's your homework, guys. So you can see here that when the price came to this rally base rally decision point, it actually was able to hold the price just for a short time. So maybe you would have put your safest take profit here. So the safest take profit was not hit, and the price finally was able to break this demand. So once this demand was broken, the price went to look for this decision point. So this one you would have filtered it, because guys, as I said, that when there is no PA, there was no call. So there was no PA here, guys, there was no PA here. So this should have not been a trade. So now you are left with this decision point, and on this decision point, guys, you can see that there is ignored accumulation. Guys, the ignored accumulation and ignored over under, sometimes they confluence each other. So you need to look for that. You see when we make a presentation on the ignored accumulation. So guys, you can see that as the price approached this decision point, which is our demand, the price actually approached it in the form of a 3 drive. There was a 3 drive here. So once you see the 3 drive here, then you put your trade here, you buy here, then you put your stop loss just below here, and your safest take profit on the new higher high. So guys, that's all about the ignored over under. So those who are watching this video without having watched the KLOU video, you need to go back and look for the KLOU video and watch it first. Once you watch that video, you will see that it's going to be easier for you to be able to understand this setup. So just a summary of this strategy. Guys, you have seen that one of the weaknesses of the ignored over under is that mostly it has got multiple decision points. So usually when you have multiple decision points, you may be confused and you don't know where to place your trade. So that's why we have actually included in this setup the price approaching is very important, guys. It's very important. If there is no PA, there is no go, guys. So usually the PA is the one that gives you a confirmation that that decision point is valid or not. If there is no PA, then there is no go. So this ignored over under is the number 5. Yeah, it's ranked on number 5 on the big 5. It's the last one. Yeah, because of its probability in the market as far as performance is concerned. So because of this drawback that it has got multiple decision points, but once you are now, if you are now able to filter the decision points, then you can be able to trade this setup successfully. But if you are someone who is confused by multiple decision points, then it might be very tricky for you to make a good success in trading this setup. So guys, we are done with the big 5 strategies and we are going to look at the other SOPs, such as the price approaching strategies, the soldiers of the jungle, and the magic strategies. So guys, you need to subscribe, like, and share, and hit the notification bell so that once we release those coming videos, you can be able to see them. So thanks guys for watching this video. Your boy Chatmaster here, signing out.